Hello, today is the 17th of June 2011, and welcome to today's silver analysis. And before we get started, I want to ask who won the Republican debate? Did you even see the Republican debate? It's available on YouTube, and I'm not a big fan of politics, how it's been running, and a lot of it is because of insanity. They're all blaming previous presidents for different reasons, yet they don't come up with viable solutions. Now, Ron Paul, he's possibly come up with a few, and the early votes have him as a clear favorite, which is interesting because the last time I seen this poll, he got none. No votes whatsoever. So I copied the exact same poll that was done by like 56 or 60 some odd Republicans and Democrats. Didn't say who they were, but so far, this is where the votes lie. And if you want to cast your vote, go on to the silverlog.blogspot. The link is down below in the more information box and click either Bachman, Kane, Gingrich, Paul, Palente, Romney, or Santorum. Now let's move on to the silver analysis and day number, I don't know, 30 something, 3, 4, 5, 6, 7, 8, 9. I'm going to stop counting. I'm counting like 32 or so in my head. This is day one in here. And the range is between this 50-day moving average, which was rising and is flattened out and starting to head a little bit lower, but for the most part still flat. And this blue line. This blue line represents exponential Fibonacci from the highs, which is $49.81, to work within the August breakout of $17.74. This translates to $33.58, which was support when the market first came crashing down towards it, came right up to the 50, back down to this 33.58 and found support there in a few days. And since then, it's came a little close to touching the 50 and Fibonacci, but not quite. For a few days in here, it was up towards the top part of this, but never could quite touch this 50-day moving average, although it was close. Then it pulled back, and now for 5 days, it's finding support on this green line. And this green line represents the volume weighted average price using the SLV shares since the August breakout. This is the SLV volume. Yesterday, silver put in its lowest volume day since early April, and it's looking early on today, and it's barely almost 10 o'clock in the morning. Markets just started as of the recording, and it's looking to make even lower volume. Significant thing about this is as long as the market's staying above this support level, below this resistance level, the market has been very boring. It's normal, boring, choppy market action when it's showing a lot of indecision. And the moving averages can oftentimes help you show the decision when we're in an indecision period. And I've talked before about the 5-day and the 50-day moving average going back through the last little while. And today I'm going to focus on this 200-day moving average, which is now risen above $30. If it breaks below this line here, at least anytime soon, this is the most likely potential support level. So what I'll do is I'll go back into history to 1974 and take a look at how this 200-day moving average has reacted. When the decade of the 70s started, silver was under $2 an ounce, and it was showing resistance at this moving average on a few occasions. When the market was able to get above this, and then now what you want to see is you want to see a clear breakout, not only above this resistance level, but even somewhere above here, which was the case. And now how is this level going to hold for that of support? It had an extremely big move. And when you see these sort of moves, now it's really critical for the significant moving averages to hold as support. It doesn't have to hold exactly to the T for It could go below it like you see here, and it could go a little bit above it, sort of like in here, but it does help with the direction. You're now starting to see as the 70s, early part of this decade comes to an end, or half decade, that it's going very choppy, above, below, above, and below, after it's already had a big gain, constructing a support level at roughly 370. If we move into the next chart, then we can see how it stayed choppy and then went extremely bullish. We see how it's going below, above, and that shows indecision within the market. And the situation here, we're looking, okay, break below the support or break above this resistance. We had a break above the resistance field, but what was happening before was you can state, well, it was going a little bit below the 200, and here, no, it barely went below it. It was pretty much a perfect hit here. It was a perfect hit here, and the market kept going higher as it broke above this resistance level. What we're seeing here at the end of 79 is it's well above this 200-day moving average. And if we move this on to 1980 to 84, then we can see that it didn't find support where it was supposed to. People are comparing today's movement sort of like it was back then, and the major difference is that when the silver market was going to 50, it was extremely above the 50-day moving average. Currently, the 50 is above 30. Well, that's the first time that's ever happened, because last time it never got above 24. It didn't find support here where it was supposed to. Just because it's supposed to doesn't mean it will. But when I say supposed to, for the bull market to continue, it's supposed to. So it didn't do it. The moving average went flat. It found resistance. Breaking this level here makes market go bearish, which is exactly what happened. Market moved bearish, pretty much found resistance. It did get above this area here. Question is, are we going to reverse the trend to the upside? Significant level here did not hold, did not break this downtrend. Thus, it went down back below the 200-day moving average, continuing its pattern of lower highs and lower lows. The next 5 years showed how it kept going lower, and here to start, had another push down, and now it's gotten above this 200-day moving average, finding support, again finding support, and now it's lifting off from this area and has a big gain. Once again, you have a big gain. How is support going to hold? Didn't do so. Went below it, finds resistance at the area, and now we're seeing the choppiness come back. We go well above it, well below it, we're going back above it, and we're going below it again. So this big rally didn't hold. The second rally didn't hold. And the market's not showing anything for any conviction whatsoever. 90 to 94. Markets continue to head towards the downside. Tries to get above it again. Fails. Breaks below the support level and has a decent sized move to what has turned out to be the bottom. Right in here. Either this one or this one. At least these are closes from the London Bullion Metals Exchange. Again, it gets above this line, showing the choppy action. And what happens again is that it has a nice break above this 200. Once again, you want to find support, and this time it does. Now you got to get above this significant resistance and hold. It got above it, it didn't hold. But as long as it holds above this support, that's fine. And we can see it by the end of the session that it didn't, because it was breaking down below the 200-day moving average. If we fast forward this to 94 to 99, or 95 to 99, then we get this choppy mess showing all this indecision. What a long period, 2 decades of the market showing this type of action. And markets are normally supposed to go up only because of inflation. People say, well, stocks are supposed to always go up. Well, that's because of inflation. That's like that with any market. And for 2 decades, it really never did such the case. Now, what's interesting here is 1997. This big move occurred before the stock market crashed in 87. Actually, wait a second. This is 97. Let me bring back 87 here because I forgot to mention that. This move here happened before the 1987 crash, which I find very, very interesting. The October 87 crash in stocks was, well, in October. This was in the spring of 1987. Now let's go back to where we were. The 95 to 99 period. Once again, you have a nice significant breakout, but not able to hold this support level. This has been constant at this point. Breaking above the 200 and not holding where it's supposed to. So now it's below it. It's now going above, below, above, and below, showing a lot of choppy action. And we move into 2000 to 2004. And it continues or starts off this by making a bear market of lower highs and lower lows, gets above it, but not by much, below it, above it. But here it really didn't go much below it. So now is it trying to find support? Well, not so much here, although it's not breaking down. Once again, going above and below it, showing indecision. And then yet another big gain. But what's different here compared to every other time in the last few years before this it had a big gain is that it's been holding this 200-day moving average. All the other times that did not occur. So the market goes from 845 down to 6, losing 20+%, very normal to happen. But now it's finding support, going higher, and the average is rising. So because that's the case, it makes support happen at higher levels. So first it was around 575, then it was around 6 and change, now it's at 6 3/4. We move this on to 2005 to 2009. And the market continued to move higher, kept finding support at this level. Yes, it dipped below this. That's fine. It didn't break below. That's still considered support in an uptrend. Has a nice another move higher, going from 7 to 14. Once again, finding support. 1, 2, 3, 4. A little bit of a failed move here. And oftentimes from failed moves create fast moves, which would be a fast move above this resistance level, which pretty much happened. And it seems clear to me that the bigger the failure, the bigger the fast move. For if it's a tiny failed move, it should be a tiny fast move. If it's a failed or a big, large failed move, it should be a large fast move. This would consider to be a large failed move going below the 200-day moving average. It had a big break below it. And then on the very first attempt to find resistance at the 200-day moving average, it found resistance but didn't go lower. And it originally found resistance at this level here, but because it was declining, it could continue to go lower and still find resistance. This time, it found support perfectly. Now what's interesting here is, like I said, failed moves create fast moves. The bigger the failure, the bigger the fast move. Well, we all know this was a big fast move because this is what we have right now. There's that big fast move, which means we are now coming up close to this rising 200-day moving average, which is currently set at around a little over $30 per ounce. Because we've had this move, once you have support, we're ready again for yet another explosive move towards the upside. If this finds support like it's supposed to meaning continuing the bull market trend, because it's already had a significant correction already. Take care.